Yeah, we're live now, guys. It's almost December here, the end of 2018. You guys throw a thumbs up if you got me, please, with the audio. That would help me out. Make sure I don't have to reset my computer. Awesome. Awesome. Hope everybody is just doing well. It was a great comeback for the stock market, obviously, this week. Probably took about a $10,000 swing to the positive this week. So that was nice, kind of a win for the good guys. I'm not really sure if I trust it, to be honest with you. There's some folks that are hitting up in the community talking about buying some stock right here. Just make sure that you're willing. Make sure that you're willing to go long on these stocks that you're picking up. I saw Boeing floated in the group. I exited Boeing this week. I took a quick 7% appreciation in 3 days over this upswing. I actually bought it when I recommended it to you guys, and it just fired up and took a quick profit there. You know, sometimes that happens. You guys need to kind of remember, if I get a quick 8%, you look at that on an annualized basis. An 8% return in 3 days is something to not scoff at. And I wouldn't have chosen to sell Boeing this week. I wouldn't have chosen to sell McDonald's either. I think McDonald's is going higher, but my exposure rate through the downturn was actually pretty extensive. So I'd really like your guys' comments on if you guys are deploying any type of defensive strategy right now. I know coming out of a good week, it's really, really easy to forget that the fact the 2 months were very, very volatile. And I had some folks hitting me up, you know, it's like, I don't know if this is for me, this and that, you know, and it happens. It's a natural reaction. And we're quick to forget how volatile the stock market is. And I hate to be the bearer of bad news. Lydia's reminded me how much money I left on the table there. Nice to see you in the group. Yeah, I did. I left a little money on the table there, not a whole lot. I sold at a pretty good price. I think we liquidated at 185. And again, I wouldn't have chosen to sell McDonald's, but you know, with the market in its current condition, the G20 summit is going on throughout this weekend. I don't think we're going to reach a trade deal. Now, we could be surprised, okay? But for you guys that are tuning into the Independent Investor channel, for my opinion on what's going on geopolitically, I'm concerned. I did take a quick appreciation in Baidu this week as well. Made a nice profit in Baidu. I'm holding AIG for the long. Finally, the VPU, the utilities index that I've owned for quite some time, finally just hit the positive there. So definitely some defensive strategy. I'm certainly just monitoring the market. If you guys want to know my impulse within the first 5 minutes of the stock market, I don't trust it, okay? I don't. I would encourage you guys to really look at this from a perspective. If you're just building your portfolio and starting and looking to get some capital working for you, honestly, the primary option is to look at it from a passive perspective and start to build those passive investments. I mean, you were given a pretty good buying opportunity over the last couple months. And if you're long the stock market, I think you're really, really good to have bought the stock market. Now, buying it here, there's really some headwinds going on. I know the Fed has backed off of their discussion to, you know, be more aggressive on interest rates. I don't know. I have a split opinion on it. It'll probably be positive for stocks. But at the same time, my personal opinion, what's happened over the last 10 years has been somewhat manufactured, okay? We've kind of lived in a manufactured world. And if we can't get interest rates up to a normalized rate, I think we're going to be somewhat in trouble. I think it's going to be tough. It's rather discouraging every time we talk about an interest rate rise of a quarter point, 25 basis points, that it just, you know, it makes the China is the next greatest country. It could very well be, Mike. I'm going to address the group here and give shout outs here in just a second, but I'm giving my opening spiel, you know, pulse on the stock market, and hopefully for you guys, you know, to tune in for 10 minutes and then shut off the video. for the guys that view it later who don't have, all the time in the world to sit here and listen to me rant for 2 hours, which is one of my favorite 2 hours of the week, mind you. It's really, really cool to see you guys. If any of you guys did take me up on the first trade, honestly, I do want to thank you for that. We'll see. I may or may not get a referral for that. The criteria was laid out by my good friend Ernest in the Facebook group there. He's also talked about it as well in the community discussion. You've got to start a taxable brokerage account with it, which honestly is not the worst idea. If you're going to have a Roth IRA, you certainly, it helps to have a funding source. If your funding source is coming from a different institution, so be it. But opening a separate brokerage account really doesn't cost you anything. That's what I do. It's really kind of my drop point, and I actually invest money in my brokerage account. I had one individual in the group here. I'll start off with margin accounts. I definitely have my opinion about margin accounts, and if you guys are out there making margin accounts work for you, that's great. I will be starting a margin account with First Trade with the sheer intention of not trading on margin. Okay, I won't be borrowing money and paying an interest rate on money that is borrowed. I don't believe in it. I won't do it. I don't trust the stock market. Now, if we were in a 40 or 50% recessed bear market, that would be the time when I would potentially take on some margin risk. But there's no way in hell I'm looking to take on margin risk here. But what I am looking to do is carry a margin account to save me from the freeloading restrictions that I get from time to time on my Merrill Edge account. And the free riding restrictions, for you guys that don't know, it's basically settling a stock and reallocating those settled dollars to another purchase before the previous purchase has had a chance to settle. And that's actually an SEC violation. They'll lock your account down basically and make sure that the settled trades are settled before they push that to ready cash for investment. So I'm a bad boy. I think my account has been restricted ever since I've owned it. And I saw Ernest has a trading account, a margin account, for that very reason. And that's what I'm going to do, because it's kind of annoying. It's really annoying to wait for your own funds to clear. Now, I don't really trade that often day to day to require that type of activity. But when I do amp it up and I shift into 6th gear, it's really nice to have that capability to realize some potential without having to worry about a free riding restriction. But the question was how much percentage. It's oh boy, it's him again, which is a pretty cool name. I like that. How much margin percentage wise are you comfortable using in your portfolio? And the answer is 0. I don't recommend the new investors get into a habit of trading on margin. What's going to end up happening is you're going to end up winning, and you're going to end up making money on that margin. And it's very, very addictive to just trade on free money. And all the while, in the background, you get caught with your pants down and end up in a position that you've got to cover. That can be a real dangerous situation. And that's the one thing I do credit Jeremy for on the financial education channel, is that he got into trouble trading margin. It was back quite a long time ago when I actually pulsed into his channel when he first started. And he got in real trouble, man. I think he dropped in the tune of $185,000. There were some other trades there that were involved in that, from what my understanding. But my thing is, I think he kept buying and trying to catch a falling knife, and all the while was subject to those margin balances. So I don't recommend it. There's no real reason to do that when you've got solid foundational approaches to the stock market, like dollar cost averaging. That's the approach that I take. And if you can step in with $25 a month, I mean, that's the sound and prudent advice that I'm supposed to tell you. I'm not saying that you can't do it, but just heed my warning. It's if you can leverage it and you can be mature and you can handle the swings, then go ahead and do it. But I'm going to tell you that it's probably unwise to do that when there's so many other approaches and ways to make money in the stock market. So that's really the first topic that I kind of wanted to talk about, is to, if you guys are out there and you're just buying stock head over heels right now, I think my forecast is coming correct a little bit, in that I thought we would probably break out of the extreme volatility from October and November. And here we are coming into December, and I think seasonality will pick up. That's just my call. I could be completely wrong, of course, but it's looking like that's going to happen. But just be kind of careful getting into some positions now. I think the valuations right now are fair to higher valued in the S&P 500. So there is some value out there, but there's not a lot that attracts me in the stock market right now, to be honest with you. I'm looking to boost up some of my passive positions that are actually lower in value, as opposed to add to stock right here. So that's just my position in the stock market. I did draw kind of this is really, it's right out of my brain. This is how I look at portfolio allocation, because I get hit with this all the time. I did touch on this in my Investing Later in Life video. But the struggle with investing, honestly, is just making sure that you take a kind of a pie within a pie perspective, and relative to the cash that you have. The size of this middle pie relative to the overall amount of cash that you have really is the secret sauce. And if your inside pie overlaps and you're 100% invested to the stock market, that's really where I would question whether or not you are in it for the long term, whether or not your age dictates your ability to stay long on the stock market. Because in 2019, I do think that the volatility is gonna increase. Now, if we don't have positive news that comes out of the G20 summit, that's going to be a pretty bad news for the stock market next week. So, I think that's what's going to happen. So, just be kind of careful with getting too crazy with increasing your inner pie here and consuming your cash at these record levels. You just want to be very, very careful in being aggressive. And I'm not saying sell everything, for fear that the stock market is going away. But at the same time, if you needed to be, Greg, thank you very much, man. I appreciate the support, brother. I really do. It's very cool. Man, this is kind of like my therapy, man. You guys have no idea. My week was crazy this week. It's pretty cool to come on and converse with you guys this evening. Very cool. Thank you for coming in. Had some absolutely killer news on the channel, that of which I cannot disclose this evening, but I will tell you guys. And this is the cool thing about you guys tuning in to the live feed every single week. You guys get some behind the scenes stuff that's going on with the Independent Investor channel that I don't disclose through the YouTube videos. Furthermore, I think there's a lot of saturation on YouTube right now. It's a point of frustration for me on the Independent Investor channel. That's why I really try to go overboard and try to relate with each and every subscriber. You guys have to understand, man, I vet a lot of emails, a lot of direct messaging as well. Certainly, I love it when you guys reach out to me, but if I don't get back to you in 1 or 2 days, hit me up again, because I'm filtering through a lot of emails, and I'm the one. I don't have a secretary looking through this stuff. So, it's tough. Thank you for that, man. I really appreciate the support. I really do. Now, the referral program for the first trade and the affiliate program, I did roll out. I put the link in the bottom of the newest videos that I've rolled out, maybe the previous 20, I guess. So we'll see how that goes. I don't have a lot of faith. I do have faith in the platform. And at the end of the day, I felt comfortable integrating that platform with the Independent Investor channel. That was a given. I mean, that was easy integration. And at the end of the day, I felt like it was the best product to put you guys into an account that gave you comparable capability, right, in the first trade account that I get in my Merrill Edge account. I think somebody asked me if I was doing away with Merrill Edge. No, I'm not. There's no reason to do that. What I am doing is I've put $500 into first trade, and I'm going to DCA that account up. I have not determined how I'm going to invest strategically in that account. I may push my fixed equities over to that account because it is just a brokerage account. Okay, it's nothing special. Like you guys, if it's your primary Roth IRA account, that's totally what I expect you to do, is make it your primary account. That's going to be the most beneficial for you. And from what I understand, and Ernest, please correct me if I'm wrong, you need to open the separate brokerage account and carry a balance of over $2,000 in that for me to even get a referral. So don't think for a second that that I'll be getting rich off of the referral program. I think it's a cool thing. Obviously, you guys can take the referral program and pay it forward yourself for your friends and family. So I encourage you to all take advantage of that. I just thought the product was actually extremely, and I'm very encouraged by being on that platform. I know there's been some really awesome dialogue and comparison between, Ryan Scribner is sponsoring Webull. I guess folks are really happy with Webull. And then M1 Finance, obviously there's a lot of great folks doing some great stuff over there. And when we offer these platforms, those are really the only three that for a beginning investor, it gives you that opportunity to get into a retirement account and trade for free. And I say trade, I mean invest. I really do. It's one of those things that I wanted for you guys. And I always commented to say, I always spoke along the lines of entering into stock for free because that's what I do. But I have to be at those incentive levels to enjoy that benefit that you guys can enjoy in first trade. So I'm going to kind of scroll up here and make sure that I'm in the group. I really want you guys to kind of understand this model from my head, because this is really kind of a core. This is the flux capacitor of the independent investor channel, man. And both of these flex, the inner pie, flexes between your ETF stock and fixed equity, depending on your risk tolerance, depending on your age, things we talk about all the time. And if you're one of those investors out there that has 100% of your money in cash, you're not going to have an inner circle. And when you step into investing, the idea is that you look at this inner circle and say, how much of my outer circle do I want to devote to my inner circle? And that's just another way of thinking about fundamentally entering into the stock market. Is this might be 20% of your outer circle. This might be 50% of your exposure. This might be 75%, and you have 25% into safe cash. And at these market levels, to be levered to the stock market at 75% or above, I would just encourage you guys to make sure that you have the risk tolerance to handle that. If you guys are young, I'm telling you right now, you probably have the risk tolerance, but don't come to me crying when stocks adjust back next year. I'm a realist, all right? And I've seen this happen many times. That's why I remember my Voice of Reason video that I put through YouTube. I was so glad to push that product out because seemingly I was the only one. You guys see any of those stock market is crashing in 2019 coming out this week? Of course not. Of course not, because we're always wanting to just ride a wave, and give customers what they expect to hear, or subscribers to YouTube what they expect to hear, and not what it is that they need to hear. Now, right or wrong, it's my opinion. But hell, I'm going to come out and actually tell you what I think you guys need to hear, even if it's contrary to what's going on. You got to be like a rock in investing, man. You can't be wavering. You can't go from week to week and decide to be an investor one week and then just decide to do something else the next week. And oh my God, I don't know what's going on next week. We try to forecast that stuff a little bit for general dialogue, but you should have a general idea of how you allocate these two pieces here, the inner pie. And the wow, I just got a great tip, man. Thank you so much. That's really cool. I really appreciate that. That kind of helps support the channel. Honestly, I should be paying you guys. You guys are supporting me a ton, man. It's been very big. I'm actually very tired right now, throwing down. So we'll actually see how long I can go tonight. But I do want to get to all the questions tonight, man. I really do. And I do want to kick it off, man. Bob left something in the group here. He was one of the first guys to comment tonight. A wise man once said, you really have to take more of a mechanical approach, and you have to have a plan that is rock solid, that you're willing to stick through thick and thin. I'm going to tell you what, that's very true, but I want you guys to have, if you don't know what thin means in the stock market, I want you to heed my warning, okay? Thin can be brutal, okay? It really can. So make sure that your exposure level in the stock market is comfortable for you, all right? And I don't know if now is a time to be expanding your inner pie as opposed to really, really making sure that your core holdings are solid, all right? Thank you very much for the tip. I really appreciate it. That's very cool, Bob. Thank you so much. It's really cool to have you in the group, man. Oh boy, it's him again, man. I just addressed that question. That's really cool. I've got Ernest, man. I've got a couple of channel creators as well. I will be calling those folks out. I've already shot my 10,000 subscriber video. Again, it's the behind the scenes stuff. You guys know how transparent I want to be on the channel. The channel's yours. It's not mine. I'm just the conduit and the discussion prober. That's all. But I want to kind of tell you guys, and I can't disclose the information that I found out this week just yet, but it is life-changing for me. I'm humbled, and you guys will be the first to know the results of that. I've been given an amazing opportunity here, and it's really based on the strength of the channel and putting the message out there. And having the right viewer watch it and reach out to me directly. So I'm humbled. It's big. It's big. So I'm super stoked, man. And you guys will be the first to be in on that. So you guys are all part of something really, really special here. And I just want to thank you for all of your support. In empowering individuals, man, because that's exactly what we're doing. I knew that's where it could go. And it's really, really fulfilling to me to see good folks, man, hardworking folks, small business owners, farmers, fishermen, trade, plumbers, electricians, truck drivers, anybody out there who has an employer that doesn't offer a 401k. Do those exist out there? Is there incentive for an employer to offer a 401k? Is it the best investment vehicle for employees? I've looked at a lot of 401ks, and I think Ernest will agree with me on this. He's usually the one that scrutinizes the 401ks with me in the Facebook group, and there's a big disparity. Typically, when I see the major brokerage houses, Vanguard has a very good 401k program, actually. But when I see 401ks come through the group for review, I typically cringe a lot because they don't give you a lot of option that is that's not riddled with fee, okay? And the employer is actually getting whacked with those fees as well. So when does it become counterproductive for me? It's very difficult for me to justify that when I know those hardworking people who don't have the time really to invest could probably enter into a self-directed program and get themselves some passive investment products in there, right? That can just work for them over time. They don't have to manage anything. It's set to be passive. It's diversified. It can dollar cost average. You can dividend reinvest it, and you let it grow, and then you can go back to work. So you work really, really hard for a week to save all that money by entering into a self-directed program. So that's what I'm going to tell you guys. I wish I could tell you right now, but I can't. But it's a big, big opportunity for me. I was presented with, and for me, it wasn't even a choice, man. It was not a choice. And I'm so excited, man. It's big. It's big. It's big. It's what I always wanted, and it's what I always thought would happen. And it just happened this week. So you guys will be the first to know the product that comes out of that opportunity, and I'm gonna go represent the channel on that. And every one of you guys will be with me. I'll represent every one of you guys in the message. There won't be anything that's stone unturned when I offer that. It's the same fundamentals discussions that I talk about. I come up with these little things to help really give a visual representation of what people need to understand on the fundamental level. And this stuff's not that hard. Anybody can understand it. That's the beauty of it, and it's amazing to me. I get hit with the same questions every single time when somebody comes with me and says, I need some help with investing, man. And I don't know anything. I don't want to screw something up so I lose all my money. Isn't it like gambling? I knew a friend that got invested and they lost everything, you know, and I'm just sitting there. Are you done? Would you like me to kind of understand? Because in each one of those cases, there was probably an identifiable mistake that was made in not succeeding in the stock market. Okay. The successful paths that people put themselves on are quite often the most obvious paths to succeed on. And that's what we teach upon. I'd love to think that anybody can find their way to the Independent Investor channel, be a new investor, hear the message, get excited about it, immerse themselves in the message, and self-educate themselves up. It doesn't do any good of the channel for me to get you all fired up to go run a marathon, right? And you go run the marathon wrong, okay? You have to validate this stuff for yourself. I can plant the seed, all right, but I can't cultivate it for you. You're the one that's gotta kind of feed it and learn up and evolve for yourself. And that's really what the channel is aimed to do as well. When we put out those messages, you know, that message that I put out this week was for investing later on in life. I mean, that was a 52-minute offering. I didn't have to do that, but I did it because we had to. It was that important for investors to understand that if you're in your 50s, 60s, and 70s and beyond, you can invest too. As a matter of fact, you guys should be telling us, the younger generation, how the hell to invest and succeed in the stock market. You know, I'm kind of in that, and I talked about this on the video. I'm in an interesting position at 41 years old, in that, you know, when I was 20 and I was investing, I was thinking about going for my Series 7 test at that time. I didn't end up doing it because I did not like how I was received sitting down at a dinner table and doing financial planning with somebody who was 50, 60 years old. Who the hell was I? What life have I lived to prove my worth? You know what I mean? And that's a fair self-assessment, because at 20 years old, guys, come on. You really just don't have a lot of life experience, and you surely don't have a lot of years of investment experience under your belt as well. And it's a learned evolution, just like anything else. So I'm glad now at 41 that I do have those years under my belt, and I can kind of sit across from anybody, whether it be a 20-year-old or whether it be a 65-year-old, and demand that level of credibility. And I do, because I have full confidence that I can look at any portfolio. I don't care if it's multi-millions. I don't care if it's $1,000. I can look at those, split them up based on risk tolerance and a very simple self-assessment. And I'm going to probably be coming out, you know, within the next few years or so. I will be coming out with a curriculum on the Independent Investor channel, really solidifying a lot of the lessons that I've used to demonstrate perspectives on the stock market, and that'll really help a lot of people, no doubt about it. We're not there yet, no way. But I will say this, with the saturation on YouTube, and my frustration a little bit with the saturation on YouTube, it seems like a few channels definitely get the nod, and that's probably why the algorithms pick up those big channels, because they were first to the game. It just makes it more difficult on a smaller channel like us to rely on the strength of the message and the strength of the referral. And that's really why I lean on you guys for sharing it within your networks and making sure that they're brought to this opportunity. It's an opportunity, but it's an opportunity that a lot of people don't think exists. All right. If you guys have questions, please feel free to throw it in the group here. Definitely my call out time. I hope Lydia is keeping her eyes on the road. I hope I'm not calling her out right now while she's on the 405. That would not be cool, seriously, because if you guys have ever been to Los Angeles traffic is no joke. I do have a special place in my heart for Los Angeles. It's a great, great place. Very, very cool stuff, man. I felt like I was in a magic, but I did like to leave LA as well and go back to Oregon when it was time, because it is pretty congested. But keep your eyes on the road. But I do have Lydia Santiago, part of my sponsored community on the Independent Investor channel. She's doing a great job. Did she reach 1,000 subscribers yet? I didn't even check this week. I was so busy. I didn't check. Did you make 1,000? You better have. Don't drive off the road either. I'm serious. And then I've got Brent. I've got Brent in the group here from the Financial Investor channel as well. He will be called out for his contributions to the group and the message and efforts to build his own channel as well. An entrepreneur himself. I'm glad to know him. Glad to have him in the group as well. I support the hell out of that guy in all of his endeavors for him and his family as well. So those are the channel creators in the group here. Always want to call those folks out, certainly. I'm surprised that there's not more channels, creators that come in. I do endorse Jake. I just started endorsing Jake, and then Ian from, I think it's PPC Ian is the name of the channel, or PPC Ian. He's got kind of a specific niche. Seems like a really genuine guy, so I do like his dialogue as well. I've thrown him in the dialogue. I didn't get to call him out on the 10,000 subscriber video, which I would have done. I have no problem doing that, but it seems like he's doing a pretty good job on the channel. Seems like a lot of people relate to the message and like his dividend approach for sure. So pretty cool, genuine guy. That's why people watch him, and that's why I would watch him too. That's my demand, is that you're honest. I don't care if you make mistakes, just be genuine about it, honestly. Don't be misleading. That's what bothers the hell out of me, no doubt. So clocking out soon. Okay, she's not on the 405 yet. That's cool. I did comment. Yep. Ernest talks about that referral program. That's well. So you guys know I'm not getting rich off of that deal. Don't worry. So I got Michael Raver. I'm excited for today's topic. Wonder what it is. I've got a bunch of topics, actually. The first one was defensive positioning, and I hate to be the Debbie Downer on such a good, again, I was up 10 grand this week. Who cares? I don't know what it means. It was a nice validation. You know, I was flexing in the portfolio, 10,000 one way, 10,000 the other. I gave you guys a few snapshots of some of the real bad days. What does it mean when the volatility is going on? Nothing in my long positions. In my short positions, I squeezed out a few stock trades that were wins. I already told you what those were: liquidated Boeing and McDonald's. Unfortunately, two very quality names, but I'm down in some Chinese stock positions that I'd like to see get back to wins. China Mobile is one of them. Alibaba I sold this week for a profit as well. So that was nice to liquidate that. I'm continuing to hold Amazon long as well. Facebook, Google, still down in those positions as well. So I thought it prudent to take some defensive posturing up and not be so levered to the stock market, not knowing what was going to go on at the G20 summit. I don't have a whole lot of faith in a dinner between our president and their president to somehow solve this thing. I think both of them are probably as close to egomaniacs as you could possibly get. So we'll see what happens. You know what I mean? I do think it's long overdue. Don't get me wrong. I think going after the intellectual property theft issue is one thing, but the perspective on whether or not tariffs are good, that's another thing. So we'll see what happens when tariffs go up 25% on imported goods from China. That's going to be a shock to the stock market. No doubt, a shock like maybe we haven't seen before for a while. So just be kind of careful. Some of the other topics that I had earmarked tonight, I will get to, but I do want to make sure and focus on the group here. That way, if you guys have questions, it's your opportunity, man, to hit me up and ask me your specific questions. I do have a lot of questions on the investing later in life, which I do plan on getting to this weekend. I absolutely could not get to them this week, and that's just the way of it. I just couldn't get to them, but I will. I will be getting to those. I had a weak moment and picked up Target. That there's nothing wrong with that whatsoever. They're gearing up for a big holiday season. I guess their inventories are as big as they've ever been. They're talking that this holiday season is going to be the best ever. I can't dispute that. I believe that's going to be true. I do still believe we're going to have seasonality. I just encourage you guys to proceed with caution. Okay. And that's never, ever ill-informed advice in the stock market. If you start just getting willy-nilly about it, it's going to bite you. All right. So just be kind of careful. If you have the opportunity to build cash, I would do it here. I'd build cash, leave your positions working for you, and you'll be good to go. Good moves are evolving. I agree. I I had sold it $10 a share higher. It looked like a buy. It dipped then. Fair enough. I hadn't been covering target. So Bob, that Bob's talking about some opportunistic buying, and I don't even know if that's a term. I look at it. I do that. If you guys get the hint from me as to why I enter a Boeing and sell it 3 days later for an 8% return, that's why I do that. Okay. It's opportunistic buying. Boeing went all the way down to 315. I picked it up at 320. So it was just an awesome profit to turn over really quick for 3 days. You know, get in, get out, shore up the profit. You know, I'm down in some of my other industrial holdings. UTX shot up really nicely, and now it's come back a little bit. So it was a great time to kind of strategically play it and push some to cash a little bit, take some profit in what I feel like has been a very volatile market. I have not sold one stock in the red over this volatility. You guys know I just kind of shelved my decision making during October and November, and that's typically the prudent move. And if there's a piece of a takeaway, see, there's some folks that had floated in. There's about 73 folks in the group right now, and there's a few guys that had tuned in, and they've left the group now. But you miss out on some of these key takeaways, and this is why I do this live stream. I'm not going to get on here and wave a magic wand in a live stream, and 5 minutes later, you're an expert stock market trader. That just doesn't exist in my mind. The experts get it wrong all the time. So a lot of people approach me and say, how can regular people get it right? Well, I get it right by doing passive investing, by doing blue chip dividend investing, by doing some opportunistic buying like Bob is talking about there. He sold the stock at a profit. He's watched the stock adjust back $10, felt like it was a good entry point to get back in the exact same stock. And that's considered channeling a stock. And that's a legitimate strategy to use. Just make sure that you're not using it exclusively, okay? I want to be very, very careful. I can't get on the independent investor channel and give specific advice like that, but I really appreciate when it's brought up as a strategic strategy that it's a mechanical type of approach. It's a jarring, get into a position. If it goes up, take the profit off the table and then monitor it. You're already a winner, right? You don't have to chase a stock if it continues up, like McDonald's, for example. All right. I sold for a nice profit in McDonald's. I watched it go up a few bits. That's fine. I'm still monitoring the stock. You see what I mean? Strategic buying. It's an interesting opportunistic buying. This is another thing that I kind of refer to that as. And you'll get those opportunities, guys, when you start to get a little bit bigger portfolios and you start to have a little bit of leverage power with your larger portfolios, because I can tell you guys, I haven't really played with my own money for a long, long time. I'm really building my portfolio with a lot of house money that I've manufactured, especially over the last 5 years. 7 years I've been doing independent investing, but the last 5 years specifically, I've taken some really, really good trading positions, and I just abide by one very simple rule. I don't sell in the red. It's really simple. I buy the best quality stocks that I can, and I don't sell when it takes a downturn. And I've done quite well with it on my opportunistic buying. And Bob is just talking about one example of just that. So I'm going to go ahead and scroll down here, guys. They've got a killer dividend. There's no doubt about that. I got Ernest who talks about retail stocks are tough. The shops I like tend to go bankrupt because they give such great deals. One of my favorite retail stocks is TJ Maxx. There's no doubt about that. I really like Roth stores and TJ Maxx. That's very, very good. Liked what I saw actually last time I was there last weekend. TJ Maxx. I don't get Kohl's, but it's a very popular retailer. Ulta Beauty, that's another one. You guys know I kicked out Estee Lauder as a potential holding for you folks along that type of line. But as far as retailers, I certainly like the old, big, and boring Walmart. That's a big one. I don't own Walmart right now. I stepped out of Walmart for a nice profit as well. I own Amazon right now. And honestly, I'm disappointed that it came back, but hell, it's Amazon. There's only one, and I just had to own it. And I just bought it at the wrong time, and it's actually come back and paid me a little bit to hold the stock here. And I think we'll be just fine with Amazon going forward. That's another reason why I sold Alibaba, is so I could kind of leverage my position with Amazon. So that was part of my strategic defensive thinking, to shore up some cash in that account and continue to let Amazon work and get me back some of that pay dirt I lost in the downturn. So that was my thought. I'm about halfway through the community questions here, guys. Brent sends, it's a nice crowd. Well, I tell you what, man, it's a devoted crowd. And I'd rather talk to 75 people at devoted folks. I do the YouTube thing. It's a lot of fun to make YouTube videos, but I enjoy the heck out of this. This is way more fun. If I knew that a channel creator was doing this every single week, I'd be all over it, especially if I just half respected the message that came out. I've kicked over on a few live feeds. Obviously, Lydia knows I kicked over once on hers. That was cool. But I've surprised a couple of them that I've subscribed to and have been around for a long time. I've watched them actually start their channels, and they're actually kind of surprised to see me. But it's kind of cool to see how others throw down a little bit. But you know, that's part of the visibility, and that's part of what I really like. I'd rather talk to 75 devoted folks to the message, and you guys will benefit from it. You'll benefit from it. You guys can't look at me and understand that I don't deliver this message because I'm succeeding in the very same message that I'm putting out there for you guys. And it all too often, it seems like folks with really good programs, they don't want to give you any of the secrets, man. They want to charge you for it. I saw another one come out this week, and I won't name names, but I was fairly disappointed to see really just another opportunity to charge people to come in and look at the individual's portfolio. And I don't see the big deal in that. I don't know. I mean, you guys know what sizable of a portfolio that I work with, and I guess maybe I could charge. I don't match the two up. I don't see that other people would see the value in that, because I don't. I would never pay to see somebody's portfolio. I could give to you. I want to cuss, but I won't. I'll try to be politically correct on YouTube, but I just don't care what you have in your portfolio. If I can provide transparency to somebody who looks at my portfolio and says, wow, I can do that too, right on. Then that's all the payment I really need. I don't need to charge you to be part of a group to come in and check out my portfolio. Why? Because I'm a badass stock investor? That doesn't exist. I'm here to tell you, single stock investing can be very, very humbling when the market turns south. It's going to be the passive portfolios that went out over time, certainly. And I try to do it all. I try to do the passive. I try to do the dividend piece. And I try to manufacture that capital inside my portfolio as well. And I'm pretty good at it. And I'm pretty visible with you guys. There's no reason to keep any secrets at all. Certainly not any reason to be charging people to come in and look at my portfolio. I've had a few people come on the channel and wonder why I don't charge. And my rhetorical question back is, why would I charge for something like that? It just doesn't make any sense. Doesn't make any sense. But that's just my perspective on it. Let me continue to cruise down here, guys, and make sure. Am I late? No, I've got Christopher Blaine here in the group, man. Don't hesitate, man. You're talking directly to me. If you guys want to talk to each other, I've got Brent in the line with FI in the group there. Make sure, just hit him with a question if you've got it, and especially if I miss something. But make sure that you guys hit me up if you got some questions. I've got Bready here, who's always got really good questions. So I'm going to address that question next. But Brent says it bounced back out of the red. Yeah, it did. And I think you're referring to the stock market this week. It was nice to see. I mean, I knew it was going to happen. Unfortunately, the swings in the stock market, when it's going down, it's like, okay, geez, this is great, and then finally when it comes back and starts to adjust in the green, it's just that teeter-totter effect. Then it's kind of cool. to validate that things aren't going to hell in a handbasket and the stock market's not crashing in 2019. God, those things just piss me off. I can't tell you how misleading those things are for investors, because they watch those and they're like, okay, I must be needing to get out of the stock market. And even the news media was buying into a lot of that too. So, what's it supposed to mean for a new investor who watches what's seemingly supposed to be somebody who knows a thing or two about investing? It gives me some insight to tell me that you don't know squat about the stock market if you're doing that. I mean, you can get on and sell all kinds of stuff on YouTube, I guess. I'm amazed at some of the stuff that people sell through YouTube, but there's a name for it, and I call it a sell out, actually. So that's just my opinion. So Bready says, hey, Ryan, when it comes to investing, let's say someone has an extra 30 grand. Make sure I got my zeros correctly. They would like to invest. Is timing important? I mean, if there's a difference in investing all of your money in the S&P 500, that's a super good question. Now, I would just say make the best decision based on what the stock market is providing to you as far as answers. What do we know right now? The stock market's at an all-time high, right? It's already run up around 7,000 points since Donald Trump became elected president, all right? That's a fact, all right? Whether or not your political view is one way or the other, that's a fact. Is it going to continue up for another 7,000 points? That's for you to decide. Okay, that's the speculation piece, to say, based on what we know, can we say that there's there's a potential for it to do the exact same over the next, let's say, 2 years? Okay, maybe. I don't profess to know, but with the China trade wars, and that's why I talk about those things every week. That's why when we get together as a group live here, there's always enough to talk about. And these are the topics that we want to throw out there, not to panic people, but to inform people about what's going on. All right. So if I had 30 grand right now, I would probably be looking to, if it was the only 30 grand that I had, and I was looking to get invested in the stock market and I was long, I would take 10,000. Okay. Now, you're restricted by your Roth IRA caps, okay? So you can kind of see there where the maximum caps in a Roth IRA kind of help you answer that question, in that you know that you can enter 5,500 in the market now, and then come January 1, you can do another 5,500, okay? Now, if you're married, you double that figure, okay? So you've got $22,000 of potential capital that can go into a Roth IRA. All right, that leaves you 8 grand, okay, of cash on the side. Now you're going to be left with $22,000 split between 2 accounts from now until January 2nd. That's January 2nd, you're going to have that money in there, all right? That's pretty heavy levered to the stock market, but I think that's absolutely worth it if you are long the stock market and you have to bridge your fear that the stock market is at an all-time high, which is a fact, okay, and be willing to take those stocks into a downturn. If I was as heavily levered as I just identified with the 22 grand as of January of next year, I would be working really, really hard to build up that $8,000 of remaining pay dirt that I have on the side, okay? So it's very, very relative. And a lot of people want to talk to me and say, Ryan, what are the hard, fast rules? There are no hard, fast and rules with investing. There are none. There are perspectives, okay? Because taking $1,000 of that 30 grand and putting it into the stock market could make just as much sense as another person taking the whole 30 grand and dumping it into the stock market. Now, would I recommend the latter at this point? No, I wouldn't. But could that strategy work? Yes, it can. You see what I mean? So I wouldn't be one of those folks to say if you took 30 grand and dumped it on the stock market, that it would be absolutely wrong of you to do that. I just think it wouldn't be a prudent, smart move. You know what I mean? Excuse me. And that's kind of what we need to think about when we're taking, imagine this green circle as that 30 grand, okay? And what your question to me is is it a good time to take the entire 30 grand and cover this pie? Or is it more prudent to, let's say, take half of it? Okay, leave the other half outside in the cash pie and then look in on the inner pie. Then your question to me becomes, Ryan, if I want to take 50% of that money, how do I allocate that within my fixed pie? And you come to me and you say, well, I'm 21 years old. Are we going to need treasuries here? Probably not. I mean, if you came to me and said, Ryan, I want to put 10% into treasuries, I'd say, okay, but why? When you're a young person, you'd be doing index funds, ETFs, and stock investing. That's it. You should have some growth portfolio, portion of your portfolio. So that's how we break this down. So if we take this treasuries piece out and we split this pie in half, you've got half ETF and half stock. If you still say, Ryan, I'd like the majority of my money to go passively, you could do that, right? And you could just go 75% in an ETF and 25% in stock. That's how I strategically break down the stock market. There's no secret sauce to it. It's just, that's how I do it, and it freaking works, right? So your question is it wise to take 30 grand and cover it within this entire green pie? I would recommend against that. I would say 50% or less right now to lever it into the stock market. Let's say 2 months down the road, you identify that maybe the stock market adjusts back in 20 points, 20%, right? And then you look at that and you're glad that you only levered 50% of the stock market because you've got 15 grand left. You've got tax protected contributions that are ready to go in that, all right? Then that time right there, you will be provided with the answer that you need to know as far as fact, instead of just forecasting when the right time is to time the market, right? So that's probably the question of the night, Brenny. And that you always hit me up with very, very thoughtful questions about what about this scenario? And those scenario questions really transcend. When people watch this message, they're like, dang, I have 12 grand. I don't have 30 grand. Or man, I've got 50 grand. How would I go about strategically allocating it to this stock market? Well, Ryan's saying be careful. If it was a 30 or 40 or 50% extended bear market where everybody was pissed off and heading for the hills, right? They were opening up the doomsday prepper cabinets, then I would be talking about, hey, maybe if you had 30 grand and you have a solid job, a good income, all right, or you're making pretty good money, now might be a time to say, yep, I can say covering this entire pie right now and paring back on your cash exposure is probably prudent. But is that time now? Man, I'm going to tell you with my very, very best opinion about my pulse on the stock market, my experience on the stock market, now is not the time you want to be throwing large chunks of capital at the stock market. I'm sorry. You're just not going to hear that from me. And I guess it would be really, really fun to come onto YouTube and just throw a bunch of manure onto YouTube so people would just consume it and be like, yes, all right. Ryan said that it's all a go for the stock market and I get to invest all my money on it and maybe I get to quit my job. You'll never hear that crap from me because it doesn't exist. It's not possible to do that. It's very, very irresponsible to talk like that, man. So that was just a killer question. And that's one of my most popular videos. I did a video for my buddy who asked me to break down. He actually had 30 grand and he was like, Ryan, what do I do, man? What are we looking at? And that plan that we put him on is working. It's working so well. And it set him up for future contributions as well. And to make sure that that capital was available down the line. And basically you're buying a few years into the future to ensure that that money can flow into that tax protected account. That's how I would approach it. I hope I answered that question. If I didn't, just clarify for me, but that's how I would do that. That's a killer question. That's why I do this live feed, man. That's what it's all about. Great, great job. Bob, thank you so much, man. I've got Andrew Trapman on the line here. Just one of the most devoted subscribers, man. You probably live in a country that's very high on my bucket list as well, man. I really hope to get down there someday. I really hope to see it, man. You're a lucky man. I hear it's beautiful. So it's great to have you in the group. I hope it's not 2 o'clock there right now. I'm not that interesting. Wake up at 2 o'clock in the morning to watch the Independent Investor Channel live. I don't know. Maybe we will become a thing one day, but right now it's very cool. We've got a very devoted group in here. We're starting to build. I don't know. Maybe this video is going viral right now. That'd be kind of cool. We've grown to 81 people in this community. It could very well be that Google is finally acknowledging that the Independent Investor Channel does exist. Sorry, I just had a deep thought for a second. So very cool stuff, man. Scrolling down here, Bready again hit me with a good question. I haven't even read it yet, but I'm sure it's a good one. VU or blue chip stock in a single month as compared to over time within the year. Okay, if I think I know what you're talking about, Jazz Wealth came out with this comparison to say if you invest in the S&P 500 and you invest in blue chip stocks, you're an idiot. Here's why that perspective is justified from his perspective. Okay, looking at blue chip stocks when they're down and then comparing it to the S&P 500, it's going to be a drag on your overall. Had you just invested in the S&P 500, right, you'd be up X%. All right. What you need to understand is, and I say this all the time, and this is one of those key takeaways that, again, this is the benefit of watching the live feed, is that looking at stock performance on a day-to-day or month-to-month or even 6 months to a year perspective is probably not going to provide you the comparative justification when you compare it to the benchmark. What I mean by that is you're going to look at that stock at a singular time and be like, I don't get it. I'm down 20% in the stock. Why do I own it? All right. Give it a few years. Okay. You cannot be so tunnel vision to where you look at a stock at any one given time and say, at this particular time, it's a drag on my S&P 500 exposure. It doesn't work that way. You have to give it a chance. And the idea is that a passive investment product like a VOO in the S&P 500 is going to be your barometer, all right? It almost gives you as much of a guarantee as there is out there to match the stock market, okay? And everybody wants to talk about creating alpha in the stock market, yada, 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 right? And single stock is what allows you to do that, okay? I'm going to tell you a truth about the stock market. The single greatest path to wealth in the stock market is to buy single blue chip companies that pay a dividend and have paid that dividend over time, to invest in those companies and leave them the hell alone. That's the single greatest path to wealth. If you can resonate with anything that I've said tonight in just under an hour of a message, go buy Home Depot, JP Morgan Chase, go buy a nice fat, discretionary name like a Disney or a Procter & Gamble in the staples sector. You know, those stocks that I recommend that you buy and hold forever, those are legit, okay? They're legit. That's why those names don't change, okay? I can't just come out with that video every month and say, here's the stocks that you can own forever. That would be boring, all right? What I can do is I can kind of increase them as I earmark different stocks that really are stocks that you can buy and hold forever. And I had one comment come through the group that said, you know, there's probably 100 stocks out there, Ryan, that you could buy forever. I concur. There absolutely is. There's a ton of good companies out there that you could buy and own forever. You know, Lockheed Martin, perfect example of a stock that you could just buy and own forever. And you don't have to worry about it. You know, it's an $85 billion market cap. You're good to go. Buy it and hold it for the long term. But I think if you're looking for short-term validation, one of the guys in the group actually did a side-by-side comparison from the self-directed program and Betterment. And it was kind of cool. It was a little bit of validation that the self-directed program was up 22% for the period that was monitored, and the Betterment was down 6% during the same period. And even though that was nice for him to say, hey, Ryan's program is legit, I know it's legit, but it's much more validating over the long term than it is by looking at it over the short term and saying, this is valid because over the last 3 months, this section or suite of a portfolio outperformed when you compare it to another one. So you got to be kind of careful with that cross comparison analysis when you're looking at it from such a short-term perspective. Okay, the stock market does not provide that type of validation over the short term. It doesn't. You'll be confused. Okay, and that's where a lot of young investors go wrong, is looking at entering into the stock market and looking at that very first excuse to get out of the stock market. And that's exactly what they're doing. They're looking for that short-term validation to say, I'm down 20%. I don't understand why. You know, I'm going to sell out now, and I'm going to take that short-term validation for myself. And I've said this many, many times, and I've been guilty of this. Every investor who's invested in the stock market has been guilty of short-term trading at the expense of long-term gain. Every single one of them. I don't care who you are. But you do it, and you feel good. You feel really good when you hit that sell button, and then you feel really good the next day. And then the stock goes up, and you feel terrible. All right. Then the stock goes up again, and you feel terrible. All right. A month later, you're actually up above to where you actually wouldn't have lost any money, and you really feel terrible. And then you buy the stock again, and guess what happens? It goes down again. Right? So you've got to be kind of careful looking at the stock market over the short term and seeking short-term validation for yourself. It just doesn't exist. Remember the comment that we had from Bob at the very beginning? You got to make a sound mechanical plan and stick with that plan over the long term. You have to. All right. And that's hopefully some of the young investors who are making their way into the community really understand that message, because I can tell you what, with the saturation on YouTube, I had this as one of my points to talk about with the group, because I don't know if you guys kind of agree or if you're happy that there's 500 financial stock investing websites out there. I can't even keep up with them anymore. I can't. I don't care to, and I don't mean that to be rude. I don't have time to cover all the channels on YouTube seemingly looking to offer the same content that I do. Except for the niche on this channel that I will always keep, but because I really haven't seen anybody attempt to copy my idea. There's no real copyright on this information, but I would venture to guess that nobody is prepared to talk about self-directed investing like I am. I believe I was one of the very first ones 7 years ago to actually start self-directed investing, and I'm the guy that's prepared to do it and teach upon how it is you can succeed doing it, because most people don't. Most people don't. Most people like the idea of taking control of their money, and they don't know squat about it, and they're not willing to learn and take a little bit of lesson up front to make sure that they can succeed over the long term. Approach it cautiously to start. Don't approach it carelessly, okay? You got to approach it carefully to start when you're a self-directed investor, because you're already a winner. You have to understand, right? Every dollar that you appreciate for yourself is going to be returned to you without the obstruction of fees and without the obstruction of tax. Okay, so you're already a winner. So all you got to do is just jog a nice race. That's all you got to do. You don't have to sprint and then fall on your face out of heat exhaustion. You don't want to do that. You just want to set yourself on a nice pace, knowing that someday you're going to look back at your decision and be like, wow, that was awesome. I made a solid plan. I stuck to the plan, and look where I am now. All right. I want you to think about those lines, because we're all going to be there as a community someday. All of us. If you come to this channel, that's the empowering message that we put through, is that I know every single one of you guys, we all have something in common. We're all alive, or we're all going to live once. All right. And everybody is going to be in that, have that ability to reflect back on the decisions that they've made. And when it comes to investing, this is legit. All right. This is the best decision that you can possibly make for yourself, bar none. No holds barred. This is the best. All right. And it's amazing the agenda of the folks that would have you think otherwise. It really is. Very good question. I really appreciate that. Guys, we've got 86 people in the group, and we've got 31 thumbs up. And I'm a fairly smart guy. I'm pretty good at math. So if there's 86 people who came in the group, minus the folks that gave me a very, very gracious tip, that of which I thank you so much. There it is. It's as if, see, now we're going viral within the community now. Evidently that helps me on YouTube. I don't really care because the integrity of the message is for you guys. Really, I appreciate you guys coming in here. You guys are just loyal as heck, and I will continue to throw down. If you appreciate the sincerity of the message that we're putting through, coming up with a little bit of an agenda to talk about. I do a lot of freelancing on this, but it's my thing. And again, the message is free of charge for folks to come on and listen to a perspective of somebody who's been doing self-directed investing for quite some time. I'm glad to do it, and I will continue to do it. So if you would be so kind, I know it's a lot to put the drink down, right? And then get up there and hit the thumbs up button if you do support the message. I really appreciate it. I appreciate you guys, no doubt about it. I'm going to continue to scroll down through some of these questions. I'm going to take a break while you guys hit the thumbs up button. That's good. That's good. I've got Marcos in the line here, man. Very cool to see you. Hey, Ryan, from I assume that's from Puerto Rico, man. I hope so. If that's not Puerto Rico, please let me know. But Puerto Rico's got a special place in my heart, no doubt about it. Love you guys, no doubt about it. And some of the best time I've ever had in my life partying in Puerto Rico, man. You guys throw it down. Good grief. I took my salsa lessons in Puerto Rico. I didn't know the first thing I was doing, but I had to. Puerto Ricans, man, they sleep, eat, and they salsa dance. They're really, really good at it. So that was a lot of fun for me. A lot of fun. Very cool. It's nice to see you in the group. If you do have a question, make sure that you hit me up. Hit me up for it. So I don't trust it. Somebody's saying I don't trust it. Andrew doesn't trust something, man. You got to let me know what you mean, brother. Gotta let me know. I don't trust it either. Uh-oh, Lydia's in the house. Teresa, it's really good to see you. I believe that was you that gave me that rockin' tip, man. That is fantastic. Thank you very much. I'm very appreciative. I'm very tired tonight, so I'm actually grinding right now. The grinder, man. You guys know what I used to do for a living, man. Commercial fishing is one of the hardest jobs you can ever do in your life. I've just chosen to forget all the bad stuff that I ever encountered on the ocean, and I tend to remember all the good. But it's been pretty aggressive, man. I got K97, very loyal subscriber. I always try to earmark when the questions come up from K97. Gonna go up temporarily once Trump says dinner went well. Yeah, I don't know, man. That's such a true statement, man. I don't like the sensitivity of our stock market, man. It's like a big baby. I just don't get it. When the interest rates go up, it should start to head down before long, I believe. That now you're thinking. So K97 is just talking about you don't have to be naive about what's going on in the world. Pay attention to what's going on, but look at it from the lens of an investor, really, because at the end of the day, all I really want you guys to care about is you. All right? I don't care what Trump has for dinner. I don't care. I don't care what he talks about with the Chinese president, Xi Jinping. I don't care, okay? You want to know what I care about? Whatever they need to do to talk amongst themselves to make my portfolio go up, right on. Talk about that, all right? Talk about it. You know what I'm saying? It might be a cynical perspective, but that's a realistic perspective, all right? And I have that with any of our political figures. Why is that? Because there's such a disconnect between our leadership in the world and hardworking people who are just trying to get by in this life. Honestly, come out with something that helps me. That's all I care about. Give me something that helps me and my family not have to struggle so much. I mean, honestly, is that? I just don't think that's a rude. I don't think that's an arrogant perspective. I think that's a realistic perspective, and hopefully, I'm not the only one. But that's a very, very true statement. I think that's what's going to freaking happen. That's what I think. I don't think the Chinese care what we do. The Chinese are very, very proud people, and they're not going to allow the big bad U.S. to stand up to them without a fight. And I think the Chinese are going to fight. I would be very, very surprised if they didn't. If they do come out of something this weekend, it's going to be It's going to be agreed upon verbally, and then they're just not going to do it. That's what I think. So we will see. That's interesting. I hope it does work out. That's why I'm trying to take a position of defensive for you guys. And if you have the opportunity to maybe take some profit in a name that you've got, now this is dependent on how much exposure that you have to the stock market. If this blue pie right here is covering this entire green pie right now, and you're fully levered to the stock market, you're braver than me. All right. It could work out for you. You could take a 40% haircut. Okay. And I really, really think you need to entertain the perspective of both of those contingencies at this point. All right. It would be extremely rude of me not to point out both contingencies right now. You want to know why? Because that's an unrealistic expectation from the stock market. To expect that it's just going to continue up on the latter proposal, that it's going to somehow run up above 30,000, which it could do. Okay. But it could just as easily approach, 20 grand again. Who knows? What's it going to hit first, 30,000 or 20,000? I don't have an answer to that. The idea is to defensively approach the stock market as if it's possible that either one of the scenarios could happen. So just be careful. All right. 111, I'm going to try to go to a minute 30, maybe minute 20. So an hour and 20 minutes to make sure that I get to all the questions tonight. Again, just want to thank the group for coming in tonight. It might have been Larry actually that left me that tip. I'm not sure which one. I can't remember if it was the T or the L. So you guys know my symbol. That symbol's going to stay. I love that. The iodine symbol, I squared. That's my branding. Right, wrong, or indifferent. That's just what we roll with. So anyway, Andrew Troutman, he throws a comment in here in 4 words, man. And if you guys didn't notice, it says I'm 90% cash. It could be the smartest guy in the group. I'm sure as hell not 90% right now. I'm probably, I'll do the quick math on it real quick, probably 35% cash right now in respect to my total overall holdings. That's on over a $300,000 portfolio. So around 100 in cash for me. So for me, that gives you an idea of how I'm taking my relative approach to the stock market. Would it be the same if I had 30 grand? I don't know. I don't know. But I'm not playing with 30 grand. I've got, a sizable amount, going to be approaching $500,000. And I don't play. I don't play. You guys know, man, I drive an old truck. I still work a nominal job, a very noble job at that. I don't look at my investment portfolio as a size of who I am as a man. It's pathetic. I have no idea why people even think that way, because I actually look at that invested capital as something that could actually go down quite significantly at any time. And that's why I've always built the portfolio to make sure that I was always willing to be able to accept fluctuation in that invested capital. You see what I mean? And that's what I want for you guys too. And I don't mean to say that if you have 30 grand that you can't lose it. Okay, that's not what I mean. But do you risk as much as myself, right, to have, that much money? If you're sitting on 500,000, that's why I did that video, to just make you think about if you've got over $500,000 exposed to the stock market. I would take a hard look and maybe take a little bit more of the perspective of 90%. That's a little bit aggressive on the cash side, but could be a good move, as long as you're willing to deploy some of that cash when you feel like the market is good, because you're almost on the side, Andrew, of being a non-investor with 90%, and I do put a lot of importance on that cash pillar, but just be careful you're not waiting for years and years and years without having a pretty good acceptable level of cash exposure. All right. So right now, you know, that portfolio right now, instead of this, I mean, you've got something that looks like this. This is what we're looking at here, you know. So the trick in investing really is seeking out the level of exposure that you're comfortable with. And if you're comfortable with, let's say I assume that the other 10% is invested and it's right for you, brother, then it's right. That's it. You're not going to hear me say what's wrong with you. You take that into a financial planner, I can tell you what they're going to do to you. They're going to try to sweet talk you out of your own money. That's what they're going to do. You're not going to hear that from me. Mike Lowry, I've got, hello, Ryan, I've been waiting. Just a regular guy, man. You should shoot me a question. That'd be awesome. But I appreciate you coming in the group and spending a little bit of time on some financial literacy. I learned just about as much from you guys as I hope you learned from me. And that's the whole idea behind striking up a dialogue about finances, because if you find it ironic that finances is one of those topics that not a lot of people like to talk about at parties, you don't talk about money. And he's like, what are you, this guy's freaking weird. What is he talking about? You know, but it's one of my favorite topics, actually. And I don't mind talking about it at any time. And that's what gives me this outlet to come on and talk about my very favorite topic with a group of devoted folks. I've got Investing Wisely, bought Aflac this week. That's really interesting. I picked up AIG this week, but Aflac is one that I'm actually going to look at, man. I appreciate you offering that value to the group. I think Prudential is a very, very interesting insurance play. I'm a big fan of the insurance space. You guys know that I don't invest in casino stocks. I don't typically invest in the cruise line. I do own Disney, which has a phenomenal cruise line, by the way. There's a few other, areas that I don't like to invest in, and those are some of them. But the insurers actually are fantastic to invest in. Utilities is another sector that I go with, that really safe, just super wide moat, just money-making machines, basically. And these group of insurers will be in that group of assets that I turn out on my next video for investing later on in life. Those stocks that people thought I was surprised, they were surprised when I offered up that older folks could own single stock. And I didn't understand that. I had a lot of older folks, man, in their 50s, 60s, and 70s. They hit me up and they were like, right on, Ryan. Tell it like it is, man. I'm like, yeah, exactly. I don't understand why you can't own single stock. As a matter of fact, owning single stock later on in life seems to be more prudent than me right now to own single stock than it does to own the index. Okay, marinate on that for a bit. So that's a really good pick. Thank you for offering that. I agree, but I will look at it. I don't cover Aflac. That's awesome. They're a great company. Very cool stuff. UTX announced 3 company spinoffs. Yeah, so there was another company that announced a company spinoff. It was Dow DuPont. So if you guys don't know anything about that deal, or you do, throw that in the community. I'm interested to know, because I just caught wind of it through my impulse. I actually did exercise and have some dinner tonight, but through lending one ear to the stock market like I always do, I heard Dow DuPont is doing some very, very exciting stuff with a 5 business spinoff, if I'm understanding correctly. But UTX, pretty boring spinoffs, cool possibilities, are pretty awesome spinoffs. Yeah, I've owned UTX for a long, long time. I may look at that very closely with the potential of actually topping up my UTX holding. I've got a pretty sizable position in UTX. It's always been my favorite utility. I do own 3M as well, but UTX is probably my number one in the industrials segment. I just love their business. They're a very well-run company. Industrials is it's an awesome sector to invest in. It's just awesome. And I finally nailed Boeing this week. I was happy about that. That was cool. Maybe I would have liked to have had an excuse to keep the stock, but do you guys kind of see my mindset about Boeing? If I buy it and it goes down, I'm a winner. If I buy it and it goes up, I shave the 8% profit and I'm good to go. And that's approaching the stock market from a winning perspective. Okay. Always enter into the stock market, giving yourself an opportunity to win, whether or not the stock goes down. And in that case, I would have got long the stock, or maybe taken some profit if it does end up accelerating up and giving you some quick profit. And that's how you got to think about it strategically. And that's that opportunistic buying that was addressed earlier on in the group. So very cool. Investing wisely. I really appreciate that, man. Very cool. If I'm not mistaken, can you please put in the comments if you're a channel creator, because I'll give you your due attention for your time and coming in here and supporting the group. I do appreciate that, but I want to say that I believe you're a channel creator. If not, I do apologize. But if you are, and there's folks in the group who want to kick over and support your channel, please do so. Very, very cool to see you, but I'm not sure if you are or not. I think there might be somebody with a similar name, but I appreciate you coming in. Mike Lowry, China is the next greatest country. It could be. They continue to, still they're really doing quite poorly. China's down 30% right now, and it's not helping my Chinese section of my portfolio because I tell you, some of these sectors that I don't invest in, I actually do think China's intriguing. Japan is even more attractive, to be honest with you. But some of the Chinese stocks that you do know that I do buy, I think Baidu is still a buy here. I do. I think Baidu is probably the biggest value. I own a sizable position in JD.com. If you guys want to talk about probably the best value there, JD.com is there, and China Mobile is actually starting to show a little bit of life as well. So I'm happy with that. I've been making a fat dividend ever since I've owned the stock for the last 6-8 months or so. I've just put it in the portfolio and forgot about it. Lydia says, I'm not a fan of Chinese stocks, kind of scary. There's reason to be scared, honestly. I don't know, once I get these positions back in the black, and I'll make money on every one of them, I will. But there's something weird about it, honestly. You say scary, I say weird. It's weird. And there's so many other good stocks out there. For the rules and regulations that govern our stock market, not perfect, but geez Louise, what the hell government is China Mobile's a perfect example. They have poor stewardship over their dividend because the Chinese government controls more of the payout to the dividend, which should be up around 75%. They only pay out 40% of the dividend, which is still 5 or 6% annually. So it's still a fat dividend. But if they paid out that dividend or used that capital for, investing in the shareholders, I mean, where is that money going? Is it going to back rubs? I don't know. So I agree with that, man. I feel that pain. I'm not a big fan. I entered into a few and I'm shaving positions. I'm making money on every one of them. I've tripped and fallen and I've made money on Chinese stocks. That's fine, whatever. I'm just not excited to rush out and hold a big percentage of my portfolio to Chinese exposure. I'm just not. That's just my honest opinion. I bought State Street. There's another great financial, awesome, and Principal Financial Group and AmeriGas. So I've got Christopher Blaine who throws 3 stock picks in there, man. I really appreciate that. Jot those down. If you guys are taking notes, that's good stuff. I do want to look at those. Again, I took AIG this week, and I'm looking at Prudential. Prudential made my buy list as well. But I appreciate you offering those picks, man. Good stuff. I've got Bob down here. I took a small, there it is. It jumps and throws throws a bunch of questions in here at the very end. This is typically how I end up adding 45 minutes to my live chat every week because I have to scroll up and pick the position again. Let me try to find my place. There's McKesson Corp. There's some good discussion going on in here. I've got John Conlon on the line here, man. This is cool stuff. Let me try to scroll back up here and find my place because I just got dumped 100 questions into my scroll here. So let me try to find my place again here. I don't know if this does this to Lydia. I don't know if she's done a lot of live streams since the last one I checked out. But this is really frustrating. I've got Nick Zion here in the line. GIS acquired Blue Buffalo, which is a terrible company. Good for them. They're trying to run that company into the ground. That's fantastic. Let's put General Mills, and we'll put General Mills in the same category as Campbell's Soup right now. How bad can you run a company? Hell, I'll throw General Electric in there as well. How bad can you run a company before you run it into the ground? That's crazy. Miles Jenkins in the line. Index investing is boring. Boring is good. It can be. There's a lot to be said about the perspectives of index investing. And if you want to invest exclusively in index funds, you can do that. It's going to be extremely boring. I do just like the excitement and the perspective of higher than average growth by entering into single stock investing, but I typically don't deviate too much from good quality names out there. I just don't. I'm not going to play with my retirement that way. And I've been burned buying good companies too. It does happen. You could be holding a GE until you die. Is that going to outperform the market? Nobody knows what stocks will last the next 10 years or more. It's a good point. I mean, that's the most sane comment I've found in the group. I got John throwing out some knowledge there. I agree. Nobody knows. I personally think General Electric is a buy here. That's just me. I think it's going to surprise some folks, and people are going to look back at it at $7 and go, "Wow, it was valued at $80 billion at $7. What was I thinking?" And I think all this exposure that everybody knows about now, all that stuff was there before when the stock was at $42. Is it better now that we know all those accounting practices that were going on? I think Fulp's going to clean it up. I really do. Our Culp, the new CEO, I think he's going to clean it up now that he knows what's going on, and that he's going to find value. There is value. There's value there. They just need to clean it up, and they need to let the dust settle. The stock is hated right now. And this is what happens when a stock gets hated, man. It gets beat down and left to die. That's what's going on with General Electric right now. I've seen it many, many times with a lot of different companies. When you're buying dividend stock, do you usually buy a single share or like a block of 5 to 10? New investor. Thanks, John. I really appreciate that question, and it's been very cool to converse with you via email. I thank you. I do apologize if I've been delayed in getting back to you, but I think I was pretty timely with your emails as well. Thanks for looking into the first trade as well. To answer your question, it's relative. When you are a new investor, you can typically buy a couple shares of a stock. It really just depends on how much starting capital that you have. It's very difficult. I know there's YouTube videos out there talking about, can you buy a stock with $10? I wouldn't even recommend that. Okay. I'd recommend saving until you get to a nice amount. 500 is a good starting amount, but just keep in mind that is just a starting amount. And when I look at a stock like an AT&T at $30 a share, I just add a zero to it and imagine a 10-share block at $300. That's how I look at blocks of share. Okay. And that's what I used to do when I bought stock. Okay. My first two stocks that I bought was Kraft at the time. That was before they spun off Mondelez and before they owned Kraft Heinz ketchup. But my first two stocks were AT&T and Kraft. All right. And I believe I bought 10 shares of one and 15 shares of the other. I believe those were my first two stock trades. And I would highly recommend that you consider the prospect of buying stock in block. All right. I've seen some portfolios where folks send me a portfolio of 40 stocks and they've got $1,000 invested. What ends up happening is you really end up watering down the portfolio, and there's no way in hell you can cover 40 stocks. And when I say cover, I just mean to pay attention to their quarterly reports, get into the financials a little bit. All that information is available. As you've seen there, hopefully you've got into your first trade account. That account is legit, man. It's really, really good. And I really hope you find that it really provides you value. I hope that it does. But all that analytics and stuff will give you the opportunity to learn yourself up. Another thing is, don't try to buy every stock out there at once. Okay. Now, the solution to this is to buy passively to start. If you're starting in the stock market, you should be looking at one of two things, either the S&P 500 or more of a total stock approach. Now, this can depend on your risk tolerance. And if I'm speaking too fast, please let me know. But since you're a new investor, either the S&P 500, which is made up of 507 companies, all right? That's all your traditional companies that you hear of. Google, Facebook, Apple, Wells Fargo, et cetera, down the line, CRM, Salesforce. It gives you exposure to all 507. The best ticker symbol that I've found to represent the S&P 500 is the VOO. The IVV is a good one. SPY is a good one. There's no real difference between the two, very minor. Don't beat me up, guys. I understand the expense ratio is a little bit different in each of them. The VOO is probably the best one. That's the one I recommend all the time. The VTI is a little bit different. That's the total market. That's going to be your small cap, your medium, mid cap, your S&P 500 companies, your large capitalization stocks that spread out across 3,700 different companies. All right. So if your risk tolerance was a little bit more on the moderate side, then I would say go ahead and go with the VTI. If your risk tolerance was more midline, then I would say you could probably invest in the VOO and buy that diversification right up front. Now, if you had $500 to invest, $500 is only going to buy you 2 shares of the S&P 500 VOO, as those blocks of products sell for $245 per block, okay? But you have to understand that that block that you're buying is buying you exposure to the entire market, and you've got to pay for that diversification. That product is built to give you that instant diversification, and owning one share of VOO is a lot different than owning one share of Northrop Grumman. Okay, it's a lot different. All right, so hopefully that helps you. I would just consider buying passively to start. That's what I would consider. And I know there's a lot of folks in the community who do enjoy M1 finance, and they do enjoy the partial shares accumulation within those pies. First trade, if you had a good starting amount, $1,000 is going to buy you 4 shares. I'd really rather see you do that than to try to piecemeal a bunch of single stocks and burn up that $1,000 in that manner. I'd rather have you buy diversification right up front with that $1,000. John, I hope that hits your question. That was a really, really good question, and one I get fairly common. It's very, very important that folks try to understand that they try to not buy too much when they start. It's very prudent advice, I think. So very cool stuff. I got willpower right below you. Not that index fund outperforms individual stocks. Yeah, I mean, it just depends on when you look at it, I guess. I tend to agree with that. I've looked at the 5-year rates of return on some of the best blue chip companies, and the returns are all in the triple digits. It's very interesting when you start to look at those stocks over the long term. If you really want to blow your mind, look at the best quality companies out there and how they've performed over the last 10 years plus. All right, that's really going to validate for you stock investing. Probably a good topic for a YouTube video, to be honest with you. So I don't trade. I hold stock till I die, and maybe sow SPHD and QQQ. Good to put into the Roth IRA, you betcha. I like the Qs. I really do. I think it's a great way to play technology. Qs have performed very, very well. Yeah, I think it's smart. I think that's a great way to do it. That's a great avenue to play. More of the kind of the spider route. I just vetted a comment before this live feed from somebody who entered into a spider ETF for energy and just got crushed. I mean, she's down 50%, wants to know what to do. And I think that's part of the risk that you run by going so specific. But if there was going to be any sector that I went specific on, it would be technology. So I like the Qs. Good stuff, Mike. I'd put that asset in the Roth self-directed account, and I'd let it roll. Maybe not until you die. I'd like to see you withdraw some of it and use it for fun. Have a little bit of fun, man. Nobody said you couldn't have fun when you get later on in life, and you're going to be able to withdraw that money tax-free. Love it, man. Let me scroll down here. I'm holding that 3 times QQ shares. Yep. MICO index funds averts emotional panic. Yep, very good. Selling and premature buying. The bad stocks are rotated out. That's a big key that people don't understand, is that as the S&P 500, as those companies do go out of business, they rotate those out and they put new companies into that. So you're really always getting a good fresh mix of stabled companies, as well as those companies that are acknowledged as upcoming growth companies and eligible to be part of the S&P 500. So good stuff. I'm keeping GE for 20 years, long-term investor. You'll probably have a 4-bagger there if you end up doing that, honestly. Good luck to you. I'm kind of with you. I'm waiting for it to come back, and it will. It'll come back. I've been in this position before. I know how to find value, and there's definitely value. I just had no idea at the time that I bought it. I believe I bought it at $18. So I'm down probably half in that position, but I didn't subject my whole portfolio to General Electric either. I subjected about 1.2% to General Electric. So I can afford to take the stock into a downturn and wait for a better day. As a matter of fact, I've bought more at this level right here. So we'll see what happens. I used to be a gambler, so money doesn't control my emotions. It's probably one benefit actually of it. Money is not everything, but not having money is everything. That's a pretty wise comment, man. I really appreciate that, Mike. Very good stuff, man. Index investing is boring. Boring is good. Agreed. Saying index funds are better than individual stock picks due to emotion is the same argument Dave uses when saying you should never get a credit card. That's wise. Yeah, and that's exactly, I agree with that wholeheartedly, because I don't agree with Dave Ramsey on that philosophy. I use my credit card for everything. Why? Because I get free money for using it for things that I would purchase anyway. So I disagree with that premise. And then, you guys know my perspective on stock picks. I've already gave it tonight. It's the single greatest path to wealth. I've identified it at best as being one of those pillars in your portfolio that should at best be 33%. And you guys can adjust those as appropriate. Mine is significantly larger than 33%. I'm not looking to play the game. I'm looking to win. And single stock is really the best way to do it. So pretty cool stuff, man. CVS Health in the long run. CVS Health is a buy right here. I absolutely love the stock. I'm actually considering taking a position in CVS. So it's very cool that you brought that up. I think you could buy CVS on the long, just like you could a lot of these quality companies. Nobody was hitting me up when CVS was down into the 60s. You know what I mean? That would have been the time really to pick up shares of CVS when everybody was hating on it. But I like the deal. They just made a deal with Aetna, I believe. Correct me if I'm wrong. But that deal right there just made them a dominant player in the healthcare space, not just the pharmaceutical space or the space that they are in right now. So they've just become kind of a dominant player with their acquisition of Aetna. So GIS acquired. I wish they never did. I'm scrolling through to make sure I got these 100 questions that got dumped on me. A player one in the group. I've got Alan Kane. But if you didn't buy the stock back when it went down, you would feel good. I love it, man. That's great. Yeah, stocks, man. I tell you what, I channeled Marathon Oil one year. I channeled it like 12 times, and I made money on it every single time. And if you guys have stuck with me for an hour and 38 minutes and you heard what I just said, it's probably given you some very, very good insight about how you can accelerate your growth up. I didn't build a $300,000 portfolio off of my income. I can tell you that much right now. So if you guys really kind of want a secret, it's relative. When I started investing, and now you guys have the opportunity to trade for free. That's why I went ahead and went with the affiliate of First Trade, is to give you guys that potential. Now, if you're looking at entering into a passive investment portfolio now to start, great. But who's to say that you're not going to be interested later on down the line if you want to take a $1,000 trading position and you're sitting on a $50,000 portfolio? you'll see that it is possible to accelerate and do some strategic buying within the portfolio and manufacture some money. And what I said was what I meant. It feels a lot better to play with house money than it does with my money. You know what I'm saying? And that's real. That's real talk. That's really what I do. So very, very cool. I appreciate that. The market is not doing well right now. Hector Mendoza. The market is, the underlying economy is slowing. And that might be what you mean. The stock market, this week, it's been on fire. So two different things there. We've been given kind of a relief rally. So if that's what you're alluding to, I think that had more to do with anything than the underlying economy slowing, which I do agree with you. There's been a few numbers that have come out that haven't been too favorable, and I think that's been kind of a drag on things. But I do agree with that. That's a smart statement. No computers aren't stupid. People are. I agree. Obstinate One is in the group. I'm finally seeing Obstinate One in here, man. Jerry, hold long term, and those little fluctuations don't mean nothing. That's exactly what you put there. Don't mean nothing. I like it. PPC Ian put me on Pepsi and J&J. I'm glad I found his and your channel. Thank you, Mike. I don't know which one is which channel was started first, because I tell you what, I've been rapping Pepsi and J&J for a long time. So the verdict is still out whether or not he got that from me or because I didn't know he existed up until about a month ago. So I've been rapping Pepsi and J&J, and I also own them long. We're both very smart investors. He seems to be a very savvy guy, does his research. And like I said, I don't necessarily tune into a channel specifically to hear him rap about the stock market. I tune into the channel because of the integrity of the message. Big, big difference for me. And there's a few folks on YouTube that I can't stand. I also want to throw up in my mouth when I'm tempted to watch their crap. Guys, we're going to start to wrap it up a little bit. 1:41. I'll go for a couple more minutes here and see if I can't address any more of these at the bottom here. As a long-term investor, a good dip makes you ask yourself, am I happy to own this stock into the red, into the bear market? So this is what I address all the time about constantly reassessing your risk tolerance to the stock market. And that is your opportunity to do just that. And that is your test. That's why when you enter into a stock, ask yourself that question. Am I willing to take this stock into a downturn? And if the answer is yes, then that can be a stock for you. If you're looking at Coca-Cola Classic and you say, am I willing to take Coke or a J&J or a Pepsi into a downturn? Am I willing to do so? Is the dividend going to make me feel a little bit better if it does go down and I'm continuing to, earn that dividend as the stock is finding its bottom, or I have the opportunity to buy more stock, maybe down? That's a very, very good comment. Very smart. I appreciate it. As you said, Ryan, last week, dead people do better in their stocks because they can't get to them to sell. Yeah, that's kind of one of those morbid statistics that I offer on the channel. Sorry to do so, but it does drive home my point, doesn't it? So many contradictory messages out there for what to do. Alan, I wish you could expand on that. Certainly, we're really trying to streamline it. And I tend to categorize a couple different people. And if there's investors in this group with over $10,000 of investable capital, I'd certainly like to know that. I give you guys my perspective from someone who has, a sizable portfolio, but I've built it up over many, many years. I think when we're talking to the masses, I categorize people based on the amount of capital they bring to the table. And I think anybody less than $10,000 should be taking a completely passive approach. Why is that? It's because you can dollar cost average free of charge now in most of the accounts that we talk about, whether it be First Trade, M1, or Webull. Those three accounts give you the best bang for your buck, access to the market and access to stock. This stuff didn't exist when I started investing, guys. You don't know how lucky you are. So the contradictory messages that I think you're alluding to is on email, on YouTube. Hopefully that's what you're alluding to. Hopefully you're not talking about the contradictory messages within the investment community. I seem to think that there is. So I agree with you on that front, if that's what you're saying. I think investing can be extremely confusing because I think a lot of information that comes through is crap. And I really don't think the people that are offering the information really understand what the hell they're talking about what new people need to understand about the stock market. There are channels out there, some of the very biggest channels on YouTube never talk about dollar cost averaging. They never talk about retirement accounts. They never talk about dividends. They never talk about any of that stuff. They only talk about pursuing growth. And I don't think that that's something that a new investor needs to hear if they have $1,000 or up to $10,000 to invest. All they need to hear is, what is the lowest cost product that I can get the most diversification in, that I can enjoy some dividend reinvestment, have the ability to dollar cost average up and do it for free? What account can allow me to do that, right? That's what a new investor needs to hear. And I just said it in less than 12 seconds, you know? But you're right. There is just so much contradictory out there, and we can't fight it all, you know? I think you could tune into mine and a few other channels and get all the information you could possibly need. The channels that I endorse them for a reason, you know? They're very, very good, very sincere. You know, Nate O'Brien being one of my favorite. Ryan Scribner is my favorite. Very, very smart, very, very conscious about the information that's put out there, understanding that there's a lot of new investors out there who would choose to consume their content over YouTube. The unfortunate part about it is a lot of those young subscribers to the message are very naive. Okay, they're very susceptible to somebody getting on and being very persuasive about their message, and then prescribing to that message because somebody said it's what they need to do. And I'm very, very open about, please don't get excited about investing because I told you to be exciting about it. I'm excited about investing for me, but I've already went through the validation I need to understand how important investing is for my financial future. And I encourage everybody to do the same. So hopefully we're offering those realistic solutions to get folks built up, because I can't get somebody to their first 25,000 in the stock market if I can't get them to their first 10, right? It's just a realistic approach to investing. And there's a very, very specific way I recommend doing that, and that's doing it passively. So awesome comment, by the way. I'm too parodied to have someone manage my money. Awesome. I love that comment. I love it. Lydia coming through with some knowledge. Very, very good stuff. I've got Myco. If you're good and lucky and have 25,000 to avoid the PDT rule, check out the 5 charts of ETFs and blue chips. It will most likely outpace your luck ratio swing or day trading plus long-term dividends. Mike, thank you for that. Appreciate it. Very cool. Kind of getting to the end of this here, pushing a shopping cart in an alley. Oh, cool. Wow. Is that what Alan Kane is doing right now? Wow. That's tough. Hey, Ryan, Baba is up almost 14% over the past month. I'm glad I got it at the lows. Yeah, Hector, I took profit. Not today. I took profit yesterday, I believe, or the day before. I can't remember, but I did take profit in Alibaba this week. I had to. I just too much exposure to China, and I'm down in my position to Amazon, and I own JD.com. I'm down a little bit in that position, so I figured I'd shore up some cash and take some profit off of the table. That's what I did. So Vanguard VTI and be done. Miles Jenkins. Yeah, that's kind of what I was alluding to. Either the VTI or the S&P 500 you could do and get away with. I think you'd be fine with either one of those two products as a solution for a beginning investor. I get holding long term and I'm more comfortable with it now, but did those same immediate drastic price drops happen back in the day on a very slight earnings miss? I don't think it matters so much when the market is being volatile like it was. It doesn't really matter if a company comes out and then reports it. I mean, we had companies that were reporting very good numbers only to give it all back. So the stock market is a fickle thing. Don't try to make rationale out of things that happen in the stock market. You're going to end up going kind of crazy. So Just be kind of careful with that. Buy the very best companies out there that you know and resonate with, and don't mind earning for the long term. I offer them all the time. Home Depot, Costco, some of the good oil majors is what I own: ExxonMobil, Chevron, Royal Dutch Shell. I do own Marathon Petroleum. Took a small position in Enterprise Partner, the limited partnership this week. That was an interesting stock buy for you guys. So a little bit of visibility on that one. Good stuff. Or could you go with VV, VBK, VXUS? They're all good, all of them. Let's all like this team, and thank you. I hope so. Yeah, you guys have been a great group tonight. I've got a few folks trickling out, man, but the core group is still in here, man. All 72 of you. I'm sure a lot of folks left the group if they're tuning in from other countries. I know it's definitely not as convenient as it is here on the East Coast of the United States, man. Some of these cats are tuning in from all over the world, and I want to thank you guys as well if you guys are tuning in from somewhere other than the U.S. or Canada. So very cool stuff. Trade deal with China is rumored to be nearly wrapped up already. Wow, that's awesome. And that's interesting. That could be a big game changer Monday. We'll see what happens. I don't know. I would be surprised at that, but that would be very, very cool. It's got to be good news. Good news will be good for the market, whether or not the Chinese want to follow through with it or not. So this is great, Ryan. I have very few people who I can talk with. Alan, you can talk to me anytime. Hit me a direct message. Really, that's what I'm here for. I love doing it. Just be as brief as you can with your email. Just kind of get down to the cut and chase. I don't need a whole lot of detail, and I've helped a lot of people, no doubt. It's the biggest payment that I could ever get on the channel, is just knowing that I've helped a lot of people, and people coming back to me and saying, hey, thanks for taking that little bit of extra time. And I enjoy it. I really do. Talking finances with people and setting them. I've got the knowledge to do so. So I enjoy doing it. If you're really sincere about learning, and you can humble yourself and say, Ryan, I don't know a lot about it. Can you help me? I sure can. And I'm willing to do that if you're willing to learn. So thanks for coming into the group, man. It's really good stuff. Chinese at least have respect for Trump. That's exactly, no doubt. I'm interested. I'm going to click on the news after we hop off the live feed here. Man, I can't wrap up one of these live feeds without getting close to 2 hours, man. Hope you guys appreciate it. My eyes are closing. But I don't mind diving into the trenches for you guys and getting you the answers and striking up a dialogue about finances, trying to fight what I feel like is a lot of saturation right now on YouTube. I think it's unfortunate. I do think it's misleading. Some of the conversation has come up in the group here tonight addressing just that. So certainly if you are new to the message, you definitely want to make yourself into the Facebook group. There's just a ton of resources in there. My administrators in that group really help out a ton, answering a bunch of questions, because to be quite honest with you guys, I can't do it all myself. I can't. But what I would encourage you guys to do is learn yourself up as much as you can on this message, so you can pay the message forward as well. Because for every one person that hears this message, there are thousands and tens of thousands of people out there that will never know that this option exists. And I would just encourage you to share the message, man. If you want to bring them onto the channel and have them hear it from me, I can only do the very best I can, throwing out a couple videos every week and throwing down on a live YouTube session every single week as well. I'm doing the very best I can to put that out there. But the only way that this YouTube channel is going to grow to fight the saturation on YouTube is honestly through referral. And that's where I rest on the strength of my subscriber base. And I will continue to help every individual who comes to me and asks me. And that's the way we're going to continue to roll. We should be at 10,000 subscribers pretty quick. I would invite each and every one of you to keep your eyes open for the 10,000 subscriber video. It's pretty cool. I've already filmed it, just so you guys know, behind the scenes. And we should be meeting that milestone here pretty quick. I really look forward to it. A lot of that accomplishment rests with you guys. There's no doubt about it. So with that, I'm going to go ahead and sign off, guys. Thanks again to the channel creators for coming in, spending some time on the Independent Investor channel. It wouldn't be a channel without you guys, man. And hopefully we address some of your questions tonight. I will check you guys next week. Have a great, great weekend. Thank you so much.